All right, what's going on, everyone? Thanks for joining. Just going to wait till a couple of more people enter the stream, and then we'll get started. Got a lot to cover today, so stay tuned. Should be a fun one. All right, we'll get started in about 1 to 2 minutes, so just hang on. I see White Rabbit is in the chat. Jarrett's in the chat. Some familiar names. What's going on, guys? All right, let's wait 30 more seconds, and then we'll get started. Oh, Vientix is here too. Welcome, Vientix, Patty. Thank you guys for joining. All right, I think we're just about ready to get started. If anybody has any questions at any point, please feel free to put them in the chat. I'll be watching, and if I see a good question that I think I could answer, I'll gladly do that for you guys. So, don't be shy to ask. No question is a stupid question, and let's jump into it. All right, so I got GME here. First thing I want to talk about is the triggers. Then I'm going to go over to LDPM. For those that are unfamiliar about that, just stay tuned. I'm going to do a good explanation for you guys. And then we're going to go into the GME report, and we're going to see all the information that we could gather coming into earnings and how it can help us with our investment decisions. So let's start off with the triggers. So, just removing the higher time frame triggers. This is something that I always talk about on Twitter, etc., on a lot of stocks. So I always talk about these bullish crosses. And what we see right here, the reason why it says very bullish here is because we have the green line, which if I put the indicator in financial names, you'll see trigger H, trigger D. So this green line is the hourly trigger, and the blue line is the daily trigger. And whenever we have a cross like this, this is a bullish cross, and it's a great opportunity to play calls for some bullish momentum. The way we actually take the position is we wait for the cross, take 50% of the position on the cross, and then we wait for a pullback to the daily trigger, which happens very often after crosses. When we get the pullback to the daily trigger, we'll add the second 50%. And once we do that, the entire rally will have a stop loss. Oops. All right. We'll have a stop loss right under the daily trigger. So if at any point price breaks below the daily trigger, we'll be stopped out. But usually, once you get a cross like this, it's already predetermined. The algo's decided they're taking this up, and we'll see a nice price rise. If you want to see some other examples of this, we can look at Tesla, which got a bullish trigger cross down at the 170s and exploded to the upside. We could look at SPY, which had a bullish trigger cross down here at 400 or so and exploded to the upside. We can have a look at Amazon. We had a bullish cross here, and we exploded to the upside from 96 to 140. We could take a look at Google. Here's bull cross. Whichever one you guys want to look at. I think you get the picture at this point. We'll go through a couple of other ones. Look at Apple. Got the bull cross at about 147, and we're still long. So why am I showing you guys this? The reason is because although the hourly trigger, daily trigger cross can be powerful on its own, for example, for GME, this was able to bring price higher by $5. I want to introduce you to something called a daily trigger, weekly trigger cross. So on Friday, they actually closed together, but on Monday, unless price goes like this, which we hope it won't, we're going to get a bullish trigger cross. So as powerful as, sorry about that, guys. As powerful as hourly trigger, daily trigger crosses are, daily trigger, weekly trigger crosses are even more powerful, and affect the macro in a sense where on a macro level, the stock's existence is turning inherently bullish. And what that means is that the momentum fully favors the bulls at that point, and it shows that bulls are pushing levels that are really causing pain in bears, which most likely will pack the bags and hang up their short for the time being until they find a more opportune time to come back in and sell the stock. We also have Tesla very close to this daily trigger, weekly trigger cross. If we go to SPY, here is where we had the original daily trigger, weekly trigger cross came up. Let me take away the hourly trigger. The daily trigger came down to the weekly trigger, but bounced off it and continued higher. Let's take a look at, let's say, QQQ. So QQQ had its cross right here. The daily trigger crosses above the weekly trigger. And you can see the explosion higher. Take a look at SOXS. This is inverse semiconductors. And you guys could see when the weekly trigger crossed below, when the daily trigger crossed below the weekly trigger, price got hammered to the downside. Let's look at some others here. Amazon. So you guys can see the daily trigger cross above the weekly trigger. Huge move higher. Google. Daily trigger crosses the weekly trigger. Huge move higher. Notice how you have a pullback to the daily trigger. That's very common, and that's when the move really starts to go. Take a look at Apple as well. Here's where the daily trigger crosses the weekly trigger and a real move higher. So I could go through hundreds of examples. Maybe we'll do one more on Netflix. So here's where the daily trigger crosses, and you have a pullback right away, which is very normal. But then price explodes from 263 all the way to 400. So if you're a swing trader, we always recommend only trading these type of setups where you'll be bullish for a long time. And it's very easy to just hang on to the position with a stop loss accordingly. So going back to GME, it really does look like the macro on GME is changing. Now I want to talk about the last trigger cross. If you just give me a second. Okay, so let's remove some of the noise here. Now, I definitely want to talk about this trigger cross that happened right here. And when this happened, originally, I did make a post on Superstonk because I thought this would be the one to lead us, bullishly for a very long time. And you guys can see we got the trigger cross, we got the pullback that usually happens after trigger crosses, and then price did explode higher. But you'll notice that we actually knifed straight down after. So what happened here exactly? If we go to Tuesday, August 16th, I'm going to show you guys that this actually marked an extremely important market top. So let's take a look at the SPY. And if we go back to August 16th here on SPY, you guys could see that the market essentially went from 431 all the way down to 350 in pretty much 5 legs. So kind of looked like this, Oops, 1, 2, 3, 4, 5. Pretty much just straight down. So although GME did get a bullish cross back here, SPY, if you really look into what happened, the daily trigger tried to come up to cross the weekly trigger, but rejected. This is where bears really stepped in. And, the same way when the triggers cross, it's bullish. When the trigger rejects, it's very bearish. And you guys can see the effect that happened on price. So yes, GME did have a daily trigger, weekly trigger cross in the past, and it did fail. But just keep in mind what made it fail, okay? Second thing to talk about is just like the daily trigger crossing the weekly trigger to the upside is bullish, so too, in the exact same way, the daily trigger crossing below the weekly trigger is bearish. So let's check out what happened on GME once the weekly trigger crossed below the daily trigger. Price pretty much, came all the way down here to 15, so cross happened at 33. You guys can see there was a pretty negative impact on price when the daily trigger crossed below the weekly trigger. Now we're finally about to cross back higher. So even though earnings are this week, and there's a possibility. I wouldn't say. Sorry about that. Chart just reloading. There's a possibility that earnings just brings it straight down. I guess if you want to say it like that. So when's earnings? I think it's on the 7th. So 3 days from now. So if the market really interprets the GME earnings bearishly and price smashes down through here, then we might be in for a little bit of pain. Again, you need the cross to confirm. If the daily trigger rejects off the weekly trigger, that's really bad, and we might be in for more bearishness. But if we are able to secure this cross and earnings doesn't do anything to that, meaning earnings doesn't take us straight back down below, then the expected next target would be this monthly trigger here. So just for an example how this works, and also worth it to note that the last couple of times GME had some really bullish price action, it always got cut short at the monthly trigger. So shorts don't really mind these moves higher. They're just going to keep it under the monthly trigger. So here was one explosive move higher. They got brought right back down. This earnings, the previous earnings was rejected right at the monthly trigger. And now's the time where we can see if we could finally break above this monthly trigger. Above this monthly trigger, price should completely flip from bearishness to bullishness, just like when price broke below the monthly trigger here at $29. You guys know that it hasn't been fun being a long-term investor in GME ever since September. I mean, don't get me wrong, it has been fun, but it hasn't been too fun for our portfolios. So just like breaking down below the monthly trigger caused all this bearishness, breaking below should cause some really nice upside price action for the stock. Now, the reason why once the weekly trigger crosses the daily trigger, price usually moves up to the monthly is that it simply attacks the next trigger above. So, if we see Tesla, once it broke through the weekly trigger, it just gravitates towards the next trigger. And that's what happened here. Here as well, gravitates up here. If you look at stocks like NVIDIA, for example, bear with me. I think my Wi-Fi just got a little slow all of a sudden, but it should be fine. All right, not such a great example here. We could look at Amazon. Yeah, so Amazon, got the daily trigger, weekly trigger crosshair, and sure enough, pretty much goes straight to the monthly trigger. Now, of course, there's a retracement is very normal after the trigger cross, which we saw here, and then the lift. I think Google might show us a good example as well. Yeah, so you got the weekly trigger cross right here, and price moved up to the monthly trigger. Maybe we'll see, yeah, so Meta as well. You get the bullish crosshair, and then, the daily trigger simply leads price higher to the monthly trigger. So I would expect the same thing here coming for GME. This is really exciting times as a GME holder. You guys know I've held my GME position throughout this entire time. Never sold it, although there has been some what I guess I'd call some brutal moments for me, reconsidering everything as price was moving really bearish here under all the triggers. I never, considered selling, but I did think we may be in for a lot more pain. Thankfully, earnings was able to kind of change the trajectory of what the triggers were pointing to. And now if we could just get this trigger cross, move up to the monthly trigger, and possibly break above, we can be looking really good for lots and lots of additional upside. So at this moment in time right here, especially if after earnings we're still above the weekly and the daily trigger, I'd be the most bullish on GME that I've been for a very, very long time. And after this cross, I would expect a break of the monthly trigger and price to move back up towards the $40 to $50 range. That's what I think we can see pretty shortly. So I have high hopes for that, and of course we'll track it and see how it plays out along the way. Now, one final thing I want to point out here is the negative monthly velo. So if you guys that are familiar with it, great. For the guys that are a little less familiar, I'll explain a little bit what I'm talking about. So monthly velo is what tells us if bears are going to be able to defend this monthly trigger here. And you guys can see over here during this month, it was fairly negative and price rejected off the monthly trigger. And then again over here, it was fairly negative and price rejected off the monthly trigger. And when it's negative like this, it tells us that bears are going to step in hard and start selling as price gets to the monthly trigger to bring it back down. But if you notice, the month of June just started and the monthly velo is barely negative. This is the stub right here. So because we barely have any monthly velo, it sets up the opportunity in June to finally break above this monthly trigger, even though we did not have an opportunity up until now. Okay, so now that we went over this, let's move on to the GME report. And the GME report, VOEX, for those of you unfamiliar with that, VOEX shows the stability and the instability in the price. And the lower black line and the upper black line, when VOEX is in between those, it's usually pretty bullish for the stock, and it means that the stock is stable and we expect to rise, to continuously rise. When VOX moves below, VOX is the pink line, when it moves below the lower black line, that is inherently bearish, and unfortunately we do expect price to move down. When VOX moves above the upper black line, that is initially bullish, but it shows that the stock moving higher like it did invoked instability in the market, and then we're going to expect it to be followed by downside. And so here, as VOX spiked into the inhibition zone, which is above this upper black line, it was initially bullish and price rose, but because it spiked erratically above this upper black line in the inhibition zone, it showed massive instability, which was followed by downside. Same thing here, VOX spiked higher, price was able to move higher, but once VOX came back down, showing massive instability, price moved down as well. So too here. Over here it was pretty much flat. Then over here, VOX started moving up slowly. This is pretty good, and price was able to rise. Once it moved up into this inhibition zone again and spiked back down below this lower black line, price saw a severe decline. Now VOX was rising leading up into earnings, telling us in advance that earnings was going to give us a nice pop, which it did, but I do want you to notice what's happening here with VOX. VOX is clearly looking like it topped. It's already spent, the most time in the inhibition zone that we've seen this entire year. And it does look like it's headed back down below this black line. When VOX does go back down below this black line, that is a bearish signal. And although it may not be a long-term bearish signal, it's going to be bearish enough that we would expect price to have a retracement down. Edward says, isn't this showing bearish divergence between price and VOX? Exactly. So while price is higher, VOX looks like it's topping and on the way down. This does look like it can be bearish as soon as this pink line breaks down below this black line. It looks like GME is going to have a pullback. So what I'm hoping that will look like is something like this, where the triggers cross, and we all know, like I showed you guys on a bunch of other stocks, after there's a trigger cross, there's a normal expected pullback. There's nothing wrong with that. And it also presents an excellent buying opportunity for calls for those that would like that. So what I'm hoping for is some kind of a pullback where we tap the daily and the weekly trigger. VOX is able to come back down and reset for the next leg higher. And this is when we can start the real push higher, where we, just fly, break above the monthly trigger, and have a really volatile and bullish move where, playing with options can be very and extremely rewarding. So I'll continue to track that move as it develops. Now, some other things that we can see, the 20-day return and the 10-day return for the snap graphs are still bullish, but the 5-day and the 1-day have, started to flip neutral or bearish, as in the 1-day is bearish. So the crosshairs below the gold line is bearish, the crosshairs above the gold line is bullish. The hedging heat map is in a gamma squeeze orientation, which isn't great. It means that, most likely too much of retail bought calls, and now the dealers are hedging it for the other way. So, the influence distribution, which shows you basically wherever the peak is, that tells you where the most likely scenario is. So the influence distribution is still showing upside. IV, obviously rising going into earnings, but price is also rising as well. Shorting behavior seems to have been drifting down since January, although we had this spike on the last earnings. In general, you guys could see the thicker black line, not the spikes, the thicker black line kind of rose into January, but since then it's been down, and you guys could see the shorting trend from the beginning of the year to now, from 1 year ago today to right now, is clearly lower. So shorts are, it looks like they're kind of giving it a rest right now, and they're not shorting as hard as they used to. Options chain, expected price ranges. So this is really cool. If you're ever trading options on any stock, once price moves above the upper bound interval or below the lower bound interval, you usually expect some kind of mean reversion. On the options chain, we see that 47% decrease in puts, meaning there was a 40% decrease in puts. So people that bought puts betting that the price is going to go down, 40% of them closed out their position, and they're not betting bearishly anymore. 58% decrease in calls, so meaning people that had calls betting that the price was going to go up, 58% of them were closed out, and there was a 131% increase in people selling covered calls. So this chain if you guys want to learn something for a second, just try to wrap your mind around this, and everything will make sense. This is all in the eyes of the dealer, not us retail. Calls, puts, short, long. This is all in the eyes of the dealer. So if I sell a covered call, betting that either IV will go down or price will go down, and the call will expire at the money, who buys that call? The dealer. And so the dealer is long a call that I sold. If I buy a call betting that the price will go up, the dealer sold me the call, so he is short. Same thing with puts. If I sell a put, which is kind of like a bullish bet, who do you think is going to be buying that put? The dealer. So the dealer is now long. Now, sold puts, I'm going to tell you this right now because I tweet about this a lot, and it's going to be a huge staple in Meme Stock Watch. Sold puts are one of the most obvious signs that price is going up. In SPY, a couple of days ago, if you guys want to see, there was a humongous increase in sold puts, and that's what led to this rally. So you can't see it so much here. If I get the report from a couple of days ago, you guys could see it. So just bear with me for 2 seconds. We'll do SPY. Whatever. It's going to take me a bit. But you guys could see like the residual effects here. There was a huge increase in sold puts, and the market rallied from 418 to 428. So sold puts is a huge bullish bet, and whoever's been selling these puts sell them at a super smart time, and for some reason always seem to be right. So Meme Stock Watch is definitely going to be keeping an eye on sold puts that occur in the market. So for GME, not much going on in the options chain. Besides, we do see a big increase on Friday in sold covered calls. Maybe some institutions are taking advantage of IV rising into earnings. Maybe some retail is bearish and selling covered calls. But whatever it is, we don't have a clear sign from the data yet if price is going to go up or down on earnings. SP Trade says makes sense. Increase sold puts equals short squeeze to balance. Forced buying pressure from the hedging. Correct. So that's basically what I have to say on GME. Again, my most hopeful price scenario is that we get the trigger cross, we get a nice little pullback to the triggers, and then we can go long, at least till the monthly trigger. If the monthly trigger rejects, we might have to be stuck in this range for a bit, but if we get a clean break above the monthly trigger, that's when I finally expect the GME type of upside to really come back. I did mention this entire week how I wasn't really interested in playing calls because, this just doesn't look like the time that you want to play calls after such a big move from 18 all the way up to almost 25. So for me personally, I stayed away from calls this week, but if I get a really good pullback and I have a great risk return opportunity right here where I can either, where I can buy calls with a stop loss right below, then I'll definitely be loading calls at this area to ride it up to the monthly trigger or higher. Now, for 2 seconds, just wanted to talk really quickly about Meme Stock Watch. So Meme Stock Watch is basically, you're going to have a dashboard, and just like you guys get like the GME reports from me on Twitter, you'll essentially be getting these reports for SPY, GME, Tesla, Apple, Amazon, Google, QQQ, AMC, bbby. Anytime there's an important data piece, I'll be sending that out. I'll be sending out videos when necessary, when like there might be a big move brewing. But one thing that I wanted to give over an emphasis with Meme Stock Watch is that I noticed in a lot of retail, especially in stocks like AMC, GME, bbby, Tesla, etc., like where retail just likes to hold on to calls because they always feel like they're going to be missing out on a big move. And over the past year, using all the systems that we do use, I have noticed that no big move starts that isn't obvious beforehand. And so usually if GME or Tesla or Apple or Amazon are going to make any of these big moves, like the reports will show it very obviously. It'll be pretty obvious in the reports. Like even this last move, once VOX bounced here, sharp bounce, and VOX started rising right here into the inhibition zone, that was a sign that we're going to see some bullish price action. And although it wasn't violent and volatile, we definitely did move higher. There was also a ton of sold puts that showed up right here. Right now there isn't, but before GME moved up from 18 to 24, there was a ton of sold puts, and I tweeted about that at the time, and we were able to catch most of this rally. I bought calls at one point. I think I bought calls for this move. this is the move that I bought calls on, but I don't like to hold on to them or whatever. I just, buy them when there's a great opportunity. I bought them right here at the weekly trigger on the pullback, and then I wrote it up to just about here, and then I sold them. But when there's huge moves that are going to last for a while that are really opportune before, the data will always show it, whether it's in VOX, whether it's in the snap graphs, whether it's in the heat maps, whether it's in the options positioning that we see come in. A lot of times LDPM can be very useful as well. So just to show you guys what that is, when LDPM, the daily time frame is pretty much the best. When this pink line moves below price, that's very bullish, and it shows that good liquidity is that GME is in good liquidity. When a stock has good liquidity, price rises. When a stock has bad liquidity, price goes down. So over here, when LDPM moved above price, that tells you that there's bad liquidity here. And when there's bad liquidity, price is going to move down. But when LDPM moves back below price, that tells you that there's good liquidity. When there's good liquidity, price moves up. And you'll see it all over the place. Here, LDPM moved below price, there's good liquidity, we rose. And over here, LDPM moved above price, there was bearish liquidity, there was no good liquidity, and price fell. So LDPM is also another excellent sign that helps us spot these like squeeze type moves. You could see what happened on Tesla. It came below price in the 160 range, and since then Tesla has just been on an absolute tear. So what I'm trying to say is that whenever there's going to be a big move in SPY, Apple, Tesla, Amazon, Google, GME, AMC, these moves are always able to be forecasted right before they happen, or even a couple of days before they happen, using a combination of LDPM, the triggers, and the data reports that we get from deep dive stocks. So that's what Meme Stock Watch is all about, just keeping the investor informed, daily forecasts of if you think price is going to be going up or down. Gavin May will be providing actionable trading levels. So Gavin uses a system of, Elliott waves. Look, there's a lot on my chart, but with Fibonacci levels, the system is really quite simple. If I try my best to break it down, I don't think I'll be able to, especially I could imagine how confusing this chart looks for you guys. So I'm sorry, but it's basically he'll give levels and he'll be like, okay, if price moves above 189.73 and it gets an hourly close above, and you guys can see I'm on the 1 hour candle, so this candle closed an hourly candle above here, then the goal is you want to buy it up to the next level. And it's really simple as that. So although this chart isn't the best example to explain to you guys how that works, and I apologize about that, he'll be giving daily levels to trade off of for various stocks, all the stocks that we cover. Like for example here, as soon as GME closed an hourly candle above 23.16, I tweeted this out at the time. That's when we went long for this move. I personally sold my calls right here as we tagged the next level. But you guys can see here, once we closed the hourly candle above, we were able to push higher. So Gavin will also be providing Elliott wave forecasts. So besides just the actionable trading levels, Gavin actually, called this bottom at 1812 live in the Discord. I was there, and the way he did that, pretty sure the way he did that, fairly simple. Just you have a nice move from bottom to top, and you come down, and he wanted us to buy this 0.786 level. So it's not perfect, but that's essentially an idea of what he does using Fibonacci tools and Elliott waves. One thing I will say is that he's really freaking good at what he does, and a lot of the times he'll have an Elliott wave forecast and the data will not look like it agrees at all, and then he'll insist that his Elliott wave forecast is right. Like let's say here GME will be really bearish in a bunch of ways, but then it'll be below LDPM, but then all of a sudden, as soon as it comes time to as soon as we actually hit this level where he wants us to buy, all of a sudden LDPM will flip bullish slightly later, and he'll have been right the entire time. So I do feel like a combination of all the things that we use, so the data from deep dive stocks, these GME reports or reports on all of them, the triggers, LDPM, and Fibonacci levels, it just makes trading so easy, so simple, very it's pretty much like you could do it all yourself. You don't even really need me to be telling you guys where price is going or whatever, because you'll be able to just take a look at the data and know for yourself. But of course, I'll be dumbing it down for anybody that doesn't actually want to learn. They just want the forecast. I'll just be saying, okay, VOX is telling us to expect a pullback here. And Gavin would be like, okay, if VOX is expecting a pullback here, then if price breaks below 23 let's say 85, then it may not be a bad idea to sell covered calls down to, let's say, the $22 area. Short, simple reports like that should be easy to actionably trade off them. So the link will be out at about 6 p.m. tonight if you guys want to sign up. We are only able to open to 100 people, unfortunately, because it's a brand new website and we don't know the capacity of it. So the first month is just going to be open to 100 people. Obviously, everyone from the Discord that's in gets free access. And then, if people like it, then maybe in a month we could open it up to another 100. So thank you guys. I guess just to leave off with a final summary, because earnings is really right around the corner, it's very hard to give an accurate prediction because earnings is very uncertain. But I have no interest in really buying calls at this area. I'm very interested if price pulls back to this level and VOX pulls back down to the black line and then starts to bounce, showing that price has found stability. Then this area is an area that I am very much anticipating to be able to go long and ride it up, a strong, powerful move back up to the 26 range. So I'm looking for a pullback here and then ride up calls here. If we're able to break above the monthly trigger, that's when I think price will move back to the $40 to $50 range. So thank you guys so much for joining. And if anyone has any questions, I'll stay on for another 5 minutes. Otherwise, I'm going to close it off here. So I'll be on for another 5 minutes. Thank you, White Rabbit, for joining. Your presence is always appreciated. And then what time zone at 6 p.m.? That's going to be Eastern time. Dark Raven, thanks for joining. Appreciate you. H-Bomb, thanks for joining. Of course, earnings can come and just teleport price just straight past the monthly trigger. And if that happens, just want to, don't, how do I say this? Just because price breaks above the monthly trigger, it's not an immediate sign to go long. Confirmation would be if the hourly trigger crosses above as well. Oh, Half Baked is here. Jordan says TLDR double down. Nice. I actually, really cool. I like this a lot. Maybe you guys could appreciate such an idea as well. I have recurring buy set up on GME on a couple of accounts. And, instead of hounding and trying to find the exact bottom of price or whatever, I just have a recurring buy. I have like 4 separate accounts, 200 on each account, and just every week it averages in for me. So I really like that. Do you need a Discord to join? The people in the Discord get free access to the website. There's going to be a $20 membership, which will get you access to like GME, AMC, bbby, or SPY and QQQ, or Tesla, Amazon, Google, and Apple. This is going to be like a $35 membership if you want to combine more of these stocks. Works like that, but everyone on the Discord gets access to all of them. The name of the other company is Deep Dive Stocks, so we're partnering with them, Deep Dive Stocks right here, to bring their data, which could be a little complicated and hard for the average retail investor to understand, bring it to you in just simple bullet points, just going to tell you what it's reading and how we interpret it and what we're kind of expecting during the next day. Will we be taking tequila shots at GME opening? Absolutely. GME earnings is all time for drinking. And I guess looking back at how much has changed over the past couple of years. Javier says, hey James, so after learning everything from the basic trading page on the Simply Options Discord, would paper trading be next? Been there for a lot of your videos, wish I knew what I was doing. I don't know about paper trading, but what I would recommend instead is just learning how to trade, watching YouTube videos, asking ChatGPT, learning about calls, puts, not going overly complicated, but just doing good due diligence, learn about options for a month, understand everything about them, understand delta, understand gamma, understand rho, understand vega, understand theta, and then once you have all those tools in your pocket, try to figure out a trading strategy using that. The Discord to join is simply options.com, but it may already be full and you may not be able to join. You could try. If there's an empty spot, I think there was 3 this morning. If there's an empty spot, it'll take you right in, and if there's no empty spot, then it'll just block your payment. But I do think there's 3 spots left, so I put the link, if you guys want to check it out, in the chat. H-Bomb says, all right, back to house chores. Nice. You and Monaco. Ravi says, I'm proud of you, J-Roll. What's up, Ravi? So, Ravi, if you guys see in the chat, is actually one of my old friends. When the whole thing was first starting, we used to get high and speak about it nonstop for hours and hours and hours. So those are the good times. I'm sure all you guys have experiences like that where you first found out about GME and you were probably high, or maybe not, and spoke about it with a bunch of good friends and, tried to take questions like, oh, but the short interest, but the naked shorting, but the FTDs, and like had all those conversations like from the Super Stonk DD. So yeah, that was Ravi and me, if you guys see him in the chat. All right, so anyone has any other questions, just ask them now. Otherwise, I'm going to be off, and if you guys want to join, the link will be sent out at 6. Also, in general, if you guys have any questions, you could always DM me on Twitter, on Discord. All right, so it doesn't seem like there are any questions left. All right, thank you guys so much for joining. Just wanted to give you guys over my thoughts, and hopefully we can do more of these. So I'll see you guys around.